Good morning, everyone, and thank you for making the time to join our webinar series on AI transformation and consultancy. I know this 1 hour don't come free on your calendar, so let's make them count. So throughout this webinar, you are going to watch AI, how AI can actually help you recover cash, actually speed up your month-end close, and actually tighten the controls you are always worrying about. But not on a roadmap, not coming soon. It's running on live on some real sample data right in front of you. So 3 words to hold on to. One is recover, one is accelerate, and one is regain. And here's the one question I want you to carry through. I want you to carry the whole way through. One is how much of your own cash is sitting idle in receivables right now that nobody is actively chasing. So stay with me because by the end of this webinar, you will know exactly how to find that number. So throughout this webinar, these are the topics that we are going to cover. So we'll start by honest about what operation finance actually costs you today. That's the mirror. Then we'll look at what genuinely changes when you put AI to work. That's the reveal. After that comes the part you are really here for. I'll be demonstrating a few use cases where you will get to know how money that comes in, how money is moving through, and money is going out. Then I'll show you how to get started in your first few days, and we'll finish with your questions. Please don't hold those to the end. Drop them in the chat as we go, and I'll pull the best ones up live. One heads up, the live demo is starting in another few minutes, so stay with me throughout the setup because it's what makes those demos land. So before we say a single word about AI, I want us to be very honest about the job as it really runs today. Because if this technology doesn't fix something you actually feel on a Monday morning, it isn't worth your time. So let's hold up on the mirror. When it comes to operational finance, think of operational finance as a rhythm. So money coming in, money moving around, money moving out. When the rhythm is smooth, nobody is noticing it. But when it breaks, it costs you in 3 ways. Cash gets stuck, it's going to get locked up in receivables that nobody is chasing, while late payers quietly drain your liquidity. Second, time gets lost. A close that drags on for days, manual reconciliations, the same data keyed in over and over. And the third, control gaps will be opening up. Like say a missing discount here, a duplicate payment there, and maybe an anomaly nobody caught. And here's what most teams tell us. They've come to accept this as just how finance works. So my whole message today is it doesn't have to be. Now, whenever we sit with finance teams, whatever the industry, all of the pain boils down to 5 recurring drivers. If I start with high transaction and invoice volume, that's kind of a sheer repetitive load. When it comes to reconciliation, like teams are matching things across ledgers, vendors, customers, and when it comes to compliance, audit readiness and month-end obligations are there. And the next thing is cash flow and working capital. Like as I mentioned in the previous slide, this cash is tied up, payments are mistimed, so forth. And when it comes to fraud, error and leakage, we could see in general that duplicate payments are coming in, missed rebates are there. So These are just a few pain points and bottlenecks that I can highlight up for you. But as I go, I'll be picking the one that hurts most in your world because everything I'm about to show you maps straight back to one of these five pain drivers. So, nothing I'll say today is a feature looking for a problem. So, let's get started. So, we talk about pain points, we talk about bottlenecks that most of the finance teams, basically operational finance staff, are currently struggling with. So, that's a part of the mirror. Now, you might wonder what AI changes in operational finance. Because the interesting question isn't is AI is powerful, it's what does it actually change about this specific job, which is operational finance. So here's the shift in one picture. So today most finance work is reactive. It's like something lands in the inbox and a person processes it. So it's always done in manual. Majority of this finance workload, most of these financial processes, business processes are running manually. So AI moves you from reactive processing to intelligent action. And uh, I want to stress and I want to stress the line at the bottom of the slide because it's the one your risk team cares about the most. Because this happens without touching your core ERP. Like think of it as a pipe. On the left, the messy stuff goes in: invoices, statements, emails, payment history, maybe some other sort of documents that we should think of. And in the middle, the AI does the work. It can either extract, it can match, it can predict, it can either flag the risk, and maybe like crucially, it explains. And on the right, out comes something that you can use. It can validate the records, clear recommendations, ready to send drafts. So every solution is a self-contained process run that sits alongside with your ERP. It can be the Business Central, SAP, Oracle, or it can be the IFS or any other ERP systems. So it complements your core, but it never rips it out and never duplicates it. So, like as I mentioned, every finance workflow will still end up in whatever the system that you all have, but the middle part of it is still running manually, which are heavily relying on humans and teams to done it in a kind of a more manual way. Now, the thing is, like when it comes to this slide, you might wonder actually where AI can deliver the most value. So based on different industry segments, we have a kind of industry matrix so that we can give you kind of an idea how these AI use cases will bring the value depend on different industry segments. So down the side, every solution, every use case which I'm going to demonstrate is there, and across the top is the industry. So and on the dark, the dots, and the bigger the impact. Like say, if we take manufacturing, automated invoice processing will bring a higher value for manufacturing, and it will be kind of there will be kind of a least impact on services. So this is just a kind of an indicative matrix, but depending on business context, business process, this might definitely change. So, but I'm not going to read this out to you instead. But find your column and run your eye down to it. If you are in distribution or manufacturing, invoice processing and reconciliation, light right up. But if you're in services, expense automation and email handling come forward. So the point is two things. We cover a lot of ground and you don't do it all at once. You start where your dots are the darkest. The three we are about to demo live are the ones that pay you back the fastest and the most visibly. All right. So this is the part you came for. I'm going to show you a few live demonstrations organized around money rhythm that we talked about earlier. So money in, collecting the cash that you owed, money moving, reconciling everything in the middle, money out, paying your vendors correctly. So I have a few more demonstrations which are rounded up around these three around these three drivers that we were talking about. So based on these use cases, based on the demonstrations, you might have questions, you might have any concerns that you want to raise. Please don't hesitate. You can just drop your any questions or any concerns in the chat itself. Okay. So let's start with one everybody feels very immediate. Now when it comes to different industry segments like say health and pharma, manufacturing, and maybe in distribution services. So a supply invoice comes in and maybe it's a clean PDF. Like maybe there's someone else to scan it and maybe like snap it on their phone. So normally that's a person typing it to a ERP. So here what we're going to show you is that the AI reads the whole thing, the vendor, the invoice number, and all the details, all the data points, and it posts it straight into a ERP with the fields already mapped. So without further briefing, I'll just show you a video that we have on this. So basically what happens here is like we have these supply invoices coming in and we upload it into a SharePoint list. And basically what happens is when you upload these supply invoices into SharePoint, this AI tool will trigger and extract the relevant data points from the invoice. So what you can see here is going to extract the net worth, the customer name, the customer ID, and everything. So what happens is it will populate the extracted data in front of each invoice. And once the population is done, the status will be turned into as complete. And here what we are showing is we are using Sage as our sample ERP here. And once the validation is done, the tool itself will start to write each and every extracted data point as separate records, as individual records into a ERP. So the process will keep iterating until every invoice detail has been posted into the ERP. So irrespective of how many invoices that you have, this data, this entire process will keep iterating once everything is completely posted to your system. So the thing is like you might have a question whether this requires APIs or what are the technical constraints behind this. But the solution that we are showing to you right now is kind of a UI level automation that which we have done. And if you are having APIs, definitely we can get it done as well. So this is just a kind of very basic solution that we have, but from a operational finance perspective, you might have these individuals, different teams who would gather all these supply invoices, vendor invoices, and will be posting it to your ERP manually. We will be definitely entering this data manually into the ERP. So from ROI perspective, I think this solution will be an ideal fit where it will reduce your time, it will increase the efficiency because there's a kind of minimal human intervention that will be involved into this system where you have to validate the data before posting it to the ERP. The next one. Now, here is something I would like to spend a bit of more time because receivables collection and recovery. And I'm quite certain that this is the one your CFO leans forward for this. So this is about finding and recovering cash you already owed. So on one live screen, you see your cash at risk, your escalated exposure, and your portfolio daily sale outstanding. So I just jump to the video. So basically what happens is we have some sample data. So we have a set of customers. We do have a set of invoice details with us, and we do have some receipts coming in. So this data can come from anywhere. It can be coming from a POS system. It can be either from a different ERP. So this data can be coming in different formats, but we can accept any format that you want. So what happens is here, so here what happens is you can see the cash at risk, the escalated amount, and the portfolio daily sale outstanding. So what happens is based on each vendor, it will highlight who are the five top customers who are slowing down. Slowing down in the sense there can be customers who had a constant payment cycle, who are paying it on time and everything is like going smoothly. But there can be, but based on the outstanding payments, it will flag the risk exposure where these customers will be slowing down their payments. Now, if I just uh, pause this, continue this video, you can see it will show you a risk distribution based on the risk severity, like say high risk, medium risk, and low risk, and the trend. So daily sale outstanding, there can be different trends. You can see like how this trend has been fluctuating across different aging buckets, and you can see at the top right corner how these aging buckets, how this cost, the pending amounts being categorized according to aging buckets, outstanding payments. So basically, on different invoices, there can be, you can categorize this. You can take different level of actions based on different set of invoices. So on the below of this, you can see the top invoices to act on. So this level of risk is determined by the payment which is outstanding and the duration of the outstanding period, and basically on the credit limitations as well. So these predefined criteria is different from each customer, it's different from each industry. So the criteria which we have taken here is a very sample general criteria that we can use. So based on this, it will identify which top invoices that we should be taking actions. So the next part is a kind of very nice one, which is the customer payment velocity. So if you have a look at this, you can see if I take the top ones here, you can see how this how the customer payment. So basically, depending on the previous payment behavior of a particular customer, we can determine whether the customer's payment pattern, the payment behavior is either improving or either is going down. So basically, you can see who are the payments who are making the faster payments. Faster payments in the sense like there can be a particular customer who are paying, making the payments within the credit period. And if you take steady customers, basically there are customers who are constantly, who are smoothly making the payments over time. And we can see slow customers, like say, there can be a particular customer whose credit period is 14 days, but it seems that the customer is like earlier the customer or the vendor has kind of a smooth payment cycle, but over the time the customer is not making the payments on time, and you have to make multiple reminders to get the payment. So that kind of a thing. And at risk is where like this depends on depends on the industry, but when it comes to at risk option, you can see on the top, you can see the average payment date is 130.5, but early it was 76.5. So there are different predefined criteria to like classify the customers based on the severity. So basically what I explained was fast paying, steadily paying, and slow paying, also at-risk customers. And you can see improving, stable, worsening, and also some other filters that you can bring it in. Now, each and every customer has its own trend chart. So you can see based on the payment patterns, how this confidence level is differentiating for each and every customer separately. Yeah. So you can see the steady customers here and at-risk ones. And you can see how this trend is going down. Like I said, the trend is stable, the trend is kind of improving. Even for at-risk customers, we can see the trend is kind of getting stable, because like they are going to stay at a kind of a risk level for a very long time. So if you take a customer who is steadily paying, you can see that the trend is going upwards, like say it's improving, and there's no problem with that customer. So based on this data, this tool can suggest you to take different actions, which I'll show you in the next slide, which is this. So based on different invoices, we can classify the risk level as well. So the earlier one which I showed you is based on the customer, based on the velocity. And here we are just going down a bit deeper, uh, where we understand from a whole portfolio down to a single invoice. So every open invoice gets a risk score on a curve that keeps climbing. That the longer it's overdue, then it's nudged up or down by how the customer actually pays you and by any credit control notes on the file. So if I just show you this video here, right, I just spend a bit of more time here. So what you can see here is that you can see based on the uploaded data, you can see the amount which is at risk, and the tool will itself identify which how much it can be recoverable and how much you have recovered up to date. And if you have any recovering targets based on a particular duration, like say per month, per week, or it can be per quarter, so it depends. So here what we have done is we have taken a week target. So the based on the outstanding payment, so there's a kind of a qualitative measure, qualitative figure that you have to recover per week. So here also we have different severity levels based on the invoice. So we have critical, high, medium, and we have different aging buckets as well. So I'll just explain it while the video is playing. So if you can see, if you go to critical, you can see the amount is at risk. Okay, you can see the amount at risk is 2.9 million, but you can recover 186,000 for this week, and there's a recovery window as well, and the urgency is critical. Now, if you just click on a particular invoice, you can see down there that it's a kind of a reasoning part that the AI does, where it will show you what's the confidence level that this outstanding payment can be fully recovered or not. So you can see that the payment is overdue by 416 days, and it's definitely at a risk. And it will give you a reasoning saying that extremely prolonged delinquency and a very high model default probability driven the debt risk up. So because the thing is, it will say that there is no recent engagement note and the payments is like stalled. So this reasoning part is done based on the data that you are being uploaded, and it always uses metrics such as the outstanding payment, the due dates, the credit periods, the aging buggers, and everything. So these kind of AI reasoning, I would say the prescriptive part will definitely take you to one step deeper, where you can take a recommended action based on the severity. So if I just show you a bit more on this, if you click on act, you can see based on different severity levels, it will suggest you different action plans. Now the thing is, like when it comes to finance, these actions are playing a crucial role, because if you have a customer who has a huge outstanding payment and it feels that the payment is like not going to come at a earliest time, so there are different actions that you can take apart from raising it to legal. So these actions will be defined by you. So based on how your financial teams are handling these high risk customers and outstanding payments, these actions can be defined as per the requirement. So here the actions which we have taken is just to showcase you the capability of the tool which we have developed. So here we are using some easygoing ones to some critical actions we can take per custom, right? So the next thing is here, if you see, like if you feel that you should propose a payment plan, when you click on that, you can see that it will draft an email as well. So this is kind of optional, and if you feel that no, that if you want some sort of other action to take, like maybe if you want to think one step ahead, we can see like how you can automatically maybe like send an email out, or there can be different aspects that you might look into. But here what we have done is, like if you select on proposing a payment plan, definitely you can the reasoning by the tool itself will draft the email, and you can just copy and paste it to Outlook and you can set it up. So basically this is how the invoice risk might look at. So you can see Okay. Yeah. If I just go down a bit, you can see the other invoices as well. So it's not just the high risk ones, but there can be other invoices which are like medium classified ones as well. Right. Okay. So uh, that's about invoice risk. But the next part is how the collect actually works. Because now when it comes to customer wise, they don't think the invoice by invoice, they think the customer, they think from a customer perspective. Earlier what I showed you is basically on an invoice perspective, but here we are taking it as overall as a customer. So here it's one row per customer, and when you click on the particular customer, you can see all the invoices which are pending from the customer's end. And if I show you a similar video of that, right, here it is. Now you can see these actions are taken based on the customer, right? And for each customer, you have a priority level as well, and you can sort based on the priority. And on the top, you can see the cash recovery stimulator. So you can just move the slider so that you can see how much cash you can unlock by acting per a particular duration. So if I continue playing this video, you can see that this is the one. When you click on a particular customer, you can see what are the unpaid invoices that the customer has. Now, currently, I am certain that you'll have to go through these invoices one by one, and it's very hard. It's very hard for you all. It's very difficult for you all to track each invoice and see which invoices are unpaid, so forth. But the thing is, here when you click, we are showcasing with the overview is entirely customer based, and when you click on a particular customer only, then you can see what are the invoices related to him, and even not just the customer, and all the invoices are also being ranked according to the urgency as well. And below there, you can see that the outstanding payment and what's the risk and to which aging category it belongs to, and the credit term per each customer. So again, here also the reasoning part is suggested by the AI tool itself. And here also you can take an action based on the customer. So earlier we can take an action based on particular invoice, but here overall you can take an action, preliminary action based on the customer. So this is a kind of very high level briefing that I can do on this demonstration. But the thing is like the benefit of this is if you just go into different ERPs, there can be different similar features that are coming in with each ERP. But the thing is, when it comes to a particular customer, there can be multiple invoices, and you might slip a few invoices, like say one or two invoices that might slip through your fingers. So the thing is like this AI tool will capture all the invoices based on the customer, and it will keep track which invoices should be focused, should be given priority, and based on the risk level that is flagging out. That's the customer part. Now the most interesting part is statement matching. So earlier we showed that how money is coming in. Now this is where money is moving. So reconciliation, I think that's the job everyone is right? So here's the honest problem. Your system says an invoice was paid, but does that actually match the cash that landed in the bank? So I have seen like in some cases where they have to like manually calculate and see whether the pay slip which has come in and the invoice that the company that your team has drafted. So there are mismatches, there are duplicates, and there are some there can be any pricing gaps as well. So in such scenarios, what happens is that you can use this feature to match each statement against the invoice and see what are the mismatches. Right. So here you can see, okay. So here what you can see is you can see how many total invoices are there. and you can see the timing differences, the unpaid cash, and amount, the invoices which has amount mismatches, and the invoices which doesn't have a receipt. Now you can see, if I just play this video for you, you can see there's the invoice and the customer, and basically what's your record is showing, and the ledger is it, and also you can see how this monitoring can capture. Okay, I just park here for a moment. So basically what happens is, like, you can see this, each and every statement has 4 criteria that it has been mapped into, like say the PO and the invoice has different timing differences, and it can have different payment mismatches that are coming in, right? And even, like, as you can see in the top, so based on those 4 metrics, each and every invoice and each and every payment slip is being matched accordingly. So you can see the difference, you can see the status of it, and you can definitely take action here as well. So basically, you can filter by the customer and see how this statement matching can be done based on particular customer. And even here also, you can do the reasoning part. Basically, if you see here, we have an unapplied cash. So basically, the reference doesn't match an invoice. So basically, you can take an action. Basically, you can draft an email and you can send it out to the customer saying, asking to sort that out for you. Okay, so when it comes to mismatch, you can see the system in your record, there can be 2.9 million. I'll just take the third record in the video. So the system showed it as 2.9, but in the ledger or the receipt, it shows as 2.5. So basically, let's say the difference is something around 500K and there's a mismatch. So these kind of detail, it's a very in-depth detail that is very hardly to capture by just going through each and every invoice, and like, it's kind of a very basic matching or a reconciliation that I think most of the teams are handling manually. So you have to just map it across every PO and see whether the IDs are matching, whether the payment is matching with the invoiced amount. So basically what here happens is, like, it's not just the payment mismatches, it can definitely see what are the unapplied cashes, the timing differences, like as I mentioned you before. So based on different criteria, you can match these statements. So the criteria, the metrics which we are showing you here can be differed with the metrics or with the criteria that you all are using within your systems. So this is a very simple overview of how the statement matching can be done. So I'll just move into the next one, which is PO matching. Now in this one, earlier what we did was, like, we are matching the payments which are coming in along with the invoices that you have. But this one is where you think about from a perspective where your money is going out. So whether your payments are going out to the vendor in a correct manner. So this is the three-way matching. Like, say you have the invoice, you have the GRN, and you have the payment slip. So here what happens is, you can see you have the total PO value, and you can see it definitely gives you the match rate, and it will also help you up in, if there are any exceptions, you can see what's the exception as well, and you can see what's the amount that you are ready to pay. So you can see here that there are different exceptions by type. There can be exceptions in pricing mismatch. There can be over invoiced scenarios. There can be duplicate invoices which has gone up, and also you can see the currency mismatch as well. Okay, so I'll just play this video out for you. So here what happens is, you can see based on the documents that you're uploading, it will take you to the PO matching part. So here, let me park for a while. So here you can see you have the PO ID, and you can see to which vendor that you are making the payment and the item that you have purchased. And you can see that if I take the very first row here, the quantity that you have ordered is 559 and the quantity that you have received is also the same. And the PO value is the currency taken as sterling pounds, and you can see the sterling pound value as well. So it gives the status as much. But if you just go down a bit, you can see there are that the quantity that you have ordered is maybe like 510, but you haven't received the quantity. So basically, in that scenario, what it will do is like it will just keep the record status updated to pending GRN ledger. And if I just go down a bit, you can see how it cleanly does the reconciliation part across, like say, if I just go down a bit, you can see how the price mismatches are being shown very clearly. And even the best part of this is you can match different currencies. Now, this is not just limited to LKR. You can see multiple currencies are here. So you can see the currency mismatch as well. So I'll just continue playing this video for you. Okay, this is the perfectly matched record over there. And you can see the reasoning part, how it explains on that. And a partial delivery, a very important one. So there can be instances where you have ordered a specific amount, but you have received a partial amount only. So what happens is, like in that case, you might want to take action. You might just like escalate this to your finance manager, and you like there's a different kind of a process that you have to walk into just to uh, get the final decision. But here what happens is, despite of getting the decision from your seniority level, the AI tool itself will recommend you to what sort of action that you can take. So one is either you can approve the payment to to receive a portion of it, and you can keep the purchase order open until you get the full items delivered to you. So these kind of reasoning can be done by the tool itself, but these solutions can be customized according to your requirement, according to your business process, and what sort of a workflows that you are having inside operational finance workflows. So if I just go down a bit more, you can see the next one is a pending GRN. Okay. So you can see here the quantity ordered is 510, but the quantity received is 0. And it will give you a recommendation saying that you can hold the payment and expedite the GRM from receiving operations before approval. So these are some similar, like some general use cases, actually some general criteria that we can find. But as I mentioned you before, that there can be some more complicated versions of this that you are maintaining, uh, currently maintaining it manually. So it can be either in an Excel, or it can be maybe some other tools that you are using. But the thing is like this, the most important part of this is the prescriptive part, where it showcases the reason and it gives you the recommended action. So we call it as a prescriptive AI. So the advantage of this is the prescriptive part. The tool itself is suggesting you the recommendations given to you on what sort of action that you can take based on different documents. Like, can be either PO, it can be either invoice, or some sort of a document that financials are always using. So in this one, you can see the over invoiced one as well. It will show you like you have over invoiced this customer, and you can see like 256 units are invoiced, but only 212 is received. And the best part of this is the price, the currency mismatch. Okay, nice. Okay, so in currency mismatch, I'm not sure whether this is a very common scenario that we can find within the finance teams, but I could say that kind of very rare scenario, because you can see the quantities and unit rate align with the PO, but the invoice is billed in euros while the PO is in LKR, and for the same numeric total. So these kind of like The thing is, like, these kind of scenarios are very hard to find, but the thing is, like, if you are dealing with overseas customers, maybe like overseas vendors or overseas customers, so these kind of things can happen. This might happen, but but it's very rare to happen. But the thing is, like, in case if these kind of scenarios might occur, so I think to this extent, to this depth, it's very hard for us to do it manually. So having a solution, maybe like using AI, we can go to this extent as well. So it's a very rare scenario, but I think even from a technology perspective, this is the capability level. This is a depth of capability that it can go for finance. So that's about PO matching, and the final one is about vendor weave. Now, let's spend a bit of more time on this. So, from one bad order to a bad pattern. So, this is the same PO data, but we have rolled it up by vendor. So, we have the PO count, we have total value, and the exception rate as well. So, the thing here is you can search it by different the customer name and customer industry. And the thing here is, like, earlier what we showed you is based on different POs and different GRNs, but here we have an overall vendor view. I'll show you that one as well. Okay. So here we have a vendor called as specific freight systems, and you can see the industry, the region, the currency, and everything is there. So here you can see, like, there are like, based on the metrics, it's the same set of metrics which we used earlier as well. So what happens is, based on each criteria, it identifies what are the gaps, or what are the different errors within the invoices or POs, basically on invoices. So you can see there's a duplicate invoice, and you can see there's a currency mismatch as well, and you can see there's a pricing mismatch. So based on different POs, you can see how well this dive into each document and see for a particular customer, for a particular vendor, you can see how well this identifies the gaps and errors within that set of documents. So the thing here is, like, earlier what we showed you was a kind of a segregated view of the POs, but here it's a consolidated view per vendor. So you can even see the exception that it has, and you can see the exception rate as well. So basically what happens here is that based on the exception rate, you can prioritize sorting out that issue at the earliest. So the thing is, like, the reason for having that exception rate is that you are aware that this vendor should be, like, how can I say? So if you take from a daily basis, like, it's very hard for you to go through each and every vendor, each and every supplier, and see, like, there are multiple invoices, multiple POs that are coming in per day, right? So when you are dealing with a huge amount of such documentations, so having a overall kind of a consolidated view of the customer will help you to figure out whether to prioritize this supply or vendor or not, because dealing with multiple suppliers at once is not easy. So with this tool, you can see based on exception rate, you can prioritize a vendor, and you can basically take prioritize actions, and like, have that process moving in a more efficient way. So this is somewhat kind of a very, I would say, kind of very commonly seen scenario. So, like, as you can see, we can just filter it by the customer, and you can prioritize to which customer that you are going to focus on. So the thing is, like as I showed you, based on the risk, you can prioritize which invoice to focus on. And here, based on the vendor, based on the exception rate, you can definitely focus on which vendor that you're going to focus on, because these kind of solutions will definitely make your life easier. So maybe I would say, like, there can be different ERPs that you are using, and there can be very similar kind of features which are coming in the ERPs, but from AI perspective, from a technology perspective, this level of depth I'm certain this level of depth is not there in the ERP. But the thing is, like, since we are talking about AI, I think this level of recommendations, actions, and this level of functionalities can be given to a certain extent. So moving into the next part is exchange rate automation. So I don't think I should be spending more time on this. So basically, we have this exchange rate automation solution, which you can find it in our website. So basically, the thing about this is that you can basically subscribe for this one, and you can get daily exchange rate updates to your inbox. And this solution is currently used internally by ZILLIONe, and also we are getting this updates to our teams as well. So you can customize this basically on your requirement. So basically, if you want this exchange rates to come into your ERP, basically we can do that as well. So in general, we have around 7 banks. In this one. So if you feel that you want to bring in more currencies like say euros, AUD or whatever, we can definitely do that as well. So currently we are having US dollars, and we are extracting from 7 banks including CBS. And as you can see in the right corner, you can see how this email is coming to our inbox regularly. So it's a daily basis. So once you subscribe to it, like it's a kind of a non-paid service. It's a free service. So once you subscribe to it, you can get the exchange rates to your inbox without any cost. Right. So that's all about what we were planning to demonstrate for you. So by now you might be thinking, all these use cases are great, but how would we actually start? So a fair question. So let me show the path, and it's deliberately a very low risk one. So we take finance teams on a 5-step journey. So and I want you to hear how measured it is. So we start with discovery. So we understand your business context, and we map your close cycles like your AP and your AR, your reconciliations, and how your reporting is doing currently at the moment. And we set an ROI baseline, and so that we are honest about value from day one. So the thing is that you don't need to start from all the use cases, all the pain points at once. But the thing of laying that return on investment baseline is to understand exactly where you can get a better benefit, and more than that, which use case or which bottleneck will solve, like which pain point should be solved first, that which will affect you in giving a quick win. And the thing is, next one is a solution blueprinting. So basically, we understand, so we prioritize the use case, and we define which tools or which architecture that you need to use, and we straight away move into implementation. And from implementation, we move into adoption, where we train your users, where we train different teams to adapt to that solution. And scaling, we can expand it broader, where we can use the similar technique to similar approach to solve other pain points and bottlenecks that you have. But the best part of this is this approach. This framework is entirely flexible, where we have different entry and exit gates. Like say, if you know that you have pain points, if you know that you have bottlenecks, but you are not sure where to start, then definitely we can help you with a guided discussion starting from discovery. But if you feel that you have a strict requirement that we have this requirement, so can you all help us to build something for it? Definitely we can start from implementation. So different entry and exit gates, you can decide where to start. So this is our AI transformation and consultancy approach that we are pitching across different industry segments. So this is how we are going to tailor it for finance teams. So that being said, I would like to open the floor for questions. And if you all have any concerns, I would like to open floor for you all to ask. So if you have any questions, please feel free to drop them in the chat so that I can respond to it. And if you feel free, you can just unmute yourself and you can raise your questions as well. Okay. Seems that we don't have much questions. But the thing is, like before winding up the session, just to summarize everything which we talked today. So basically, we are looking at how well this AI, this technology can be used within the finance teams. So if you take one thing from today, make it this, which is start with one clear finance decision that you feel that you should definitely solve it. So you don't need to transform everything at once. You start with one clear finance decision first. So think back over what you have just seen, the receivables recovery, the reconciliation, the vendor control, and pick the one that that landed hardest for you. So that's your starting point, and we can have it running as a kind of a strict time frame quick start. So here's my ask. So give us a few minutes, then we can definitely have a session with you, and we'll find your single highest value first outcome together. So that being said, I think I I think that you find this session very insightful and productive because when it comes to finance, it's a very broader segment, but here we focused on how operational finance can be, how AI can be used in operational finance because operational finance is a kind of very daily basis, kind of very operation heavy subsegment inside finance. So as a showcase to you. So other than these use cases, there can be different other pain points and bottlenecks that you might have within your organization, inside your team, and currently you might be struggling to solve. So we are not just stopping here. It's just a kind of a temporary park here for now, but going forward we'll be keeping in touch with you. But if you feel that if you have any requirements, any pain points, any bottlenecks that you feel that you should be raising to us, please feel free to contact us via email. And if you need it, we can drop our contact numbers as well. So yeah, I think we can wind the webinar. We can wind up the webinar series for today. So thank you so much for joining, and looking forward to see you in another session. Thank you so much and have a great day.